Hi, guys. Thanks for tuning in to another episode of Nuggets News. We're back with our housing and economy update with Martin. How are you, Martin?
Yes, I'm very good, thank you. Although I have to say, I find the continuous flow of uncertainty a little disconcerting, and it's more and more difficult to try and keep track of everything because things are moving very quick. But we, we try and give people a snapshot as at 6 p.m. on the 24th. By tomorrow, it could all change again.
It is just crazy. Every month we think that things couldn't get crazier, but we're staring down the barrel of World War III with these insane politicians that are in charge. And we've been doing a lot of episodes recently about how Australia became so corrupted and everything. And then on Twitter just before, I see they're banning, gas cooking in new home builds in Sydney, and Chris Bowen signed onto some new climate change agreement. So all our cows are going to have to start using Bovier from Bill Gates. Like, it's just insane, this world that we're now living in.
Yeah, and YouTube is going to be added to the list of social media entities that will require age verification, I notice as well.
Yeah, UK now going to collect the data of DNA of all newborn babies. So this all ties in DNA, digital ID. Then they're going to want to chip everyone, and the digital enslavement grip's complete at that stage, really, isn't it?
Yeah, absolutely. In the meantime, of course, the old debt counter continues to rise. Public debt continues to rise globally around the world. Private sector debt is rising. Household debt is rising. So we have this asset inflation story going on. Prices are up. Well, the reasons prices are up because there's more money in the system. It's not solving anything. It's just creating more money to create more money, which effectively is mortgaging the future as well. So we have two sets of forces: the digitalization and control force, and the devaluation and the degradation of money, and the mortgaging of the future. I mean, that is the underlying underpinning, if you like, of everything that we see. And we can talk about a whole bunch of other stuff, but it's important that people actually understand that there is some sort of agenda under all this, which is not good.
Yes, absolutely. Well, let's dive into these slides of yours, Martin. So, betting on the taco trade or bust?
Yeah, so this was a show I made the other day, and I was trying to reflect on what markets are doing, because markets, of course, panicked in early April when the Trump tariffs came in, but they've basically said, "Oh no, that's okay. He's going to back off some of that." And well, there's been one agreement, of course, Britain, who did a sort of a partial trade agreement, although actually they've ended up paying a lot more tariffs than they did previously. But markets have assumed that the tariff thing will get sorted out, despite the fact that July the 8th is when that 90-day period ends, and we don't know what's going to happen beyond that. So that's interesting. And it's interesting. Japan, of course, walked away from negotiations because Trump was turning the dial on you need to spend more on defense expenditure, and Japan weren't happy with that. The second element in this taco, Trump always chickens out trade, it relates to Jerome Powell and the Federal Reserve, because he's come out quite strongly criticizing Powell about, rates should be cut, et cetera, et cetera. And there was a bit of speculation earlier on whether he'd actually kick Powell out early. Doesn't seem he will, but he's still throwing a vitriol in that direction. And then the third one, of course, relates specifically to the Middle East situation and Iran. And if you move to the next slide, of course, whilst markets assumed nothing was going to happen, it did. And we had the duck and cover, that's what I call my show on that, when they bombed Iran. And it is just worth reflecting on the next slide of just how dramatic this operation was. Operation Midnight Hammer, it was called. A massive amount of air power from the US, refueling, dropping these massive bombs. But nobody knows whether, in fact, it did anything, depending on who you listen to and who you sorry, excuse me.
You're right. No, that was some of the reports that I'd seen as well about a lot of different satellite footage showing that maybe these bombs didn't hit, and maybe these big bunker busters that they're talking about actually didn't do that. And so it's all just kind of up in the air with what actually happened. And it's like the whole
Well,
world now, we don't know what to believe.
literally up in the air. And the point is that this 400 kilograms or whatever it is of the more refined material, they probably shipped somewhere else anyway. So, I mean, to my mind, this was dramatically symbolic. And of course, there was a lot of panic. Oil prices went all over the place. People were talking about the Straits of Hormuz essentially, being blocked and all sorts of things. But then Trump came out and said, "Oh, well, we've got a peace agreement." And it does look as though both sides have now accepted it. So they've stepped back from the brink. And Trump actually said, "Well, we couldn't have done it without the military, et cetera, et cetera." This whole thing stinks from however you look at it. And I don't think they've solved the fundamental issue, which is the nuclear question and what Iran is doing. But they have sort of kicked it down the can a little bit. Israel, of course, will claim, I think they have, that they've achieved everything they wanted to. So maybe we'll get a little bit of peace. But what I wanted to do is to talk about the market impact, because, of course, what we've seen over the last few months is this massive volatility, up and down all over the place. And this volatility has continued, and we might look in a second at
I was just going to say,
Yeah.
I'll cover this in more detail in some of my Evil Elites videos, but let's not forget that Iran have been close to having a nuclear weapon for 40 years, if you believe the media and some of the propaganda coming out of Israel and whatnot. And it's just like the Middle East and the weapons of mass destruction that were never there and all the stuff. People are just so used to being deceived, and we find out it's all BS and it's all part of this plan. It's supposedly to drag us into World War III and try and get a conflict going with China and Russia, to drag in Europe, America, and Australia, the allies. It's just insane that people don't seem to be really wanting this peace. It's just like everyone's poking the beehive.
Yeah, and two observations. The first is everyone's now talking about the economic legacy that can be created by effectively investing in war. It's massive when you think about how much now they're going to spend on military. All of the military-related stocks have risen dramatically, and that's suddenly a good thing. I find that unconscionable, frankly. The other point is we just don't know the truth, and we're not given the truth. We're given spun stories left, right, and center, and the truth is that we probably will never know the truth, but we don't know what they had. We don't know what they were planning, et cetera, et cetera. But what was fascinating about the journey of the last couple of days is how Iran effectively informed the US that they were going to actually attack one of their bases in and then did, and no one was hurt. It was like mirror versus reality, form versus substance. And to my mind, this is so much performative, right? We actually don't know what's really going on. And that's a really big concern to my mind, because people are going to be swallowing all these sorts of stories. And, truth has been thrown out the window, frankly.
Yeah, absolutely. Like I said, we'll continue to go down that rabbit hole more in our Evil Elite series. But moving on to all the markets and their reactions.
Yeah, well, we should, because this is an economic conversation. And crude oil, massively up. It got to 76, not quite as high as at the beginning of the year when it was close to 80. And then this is the WTI. It's dropped down to 65 now. So, prices are back down. Still a little bit up from where they were at their lows. But that's an interesting observation. And of course, that'll have a downward pressure on inflation, a downward pressure on LNG prices as well. If you go to the next slide and look at the volatility index, which is the US one, volatility is really low now. We had a massive spike up to 60, close to 60, 56 when the April announcements were made. It's way back down. So markets are saying, oh, everything's fine. We'll just carry on as normal, which is, I think, my point about the taco trade. Markets have pretty much said, oh, we don't know what's going to happen. So we just assume it's going to be good. And that's why, of course, then if you look at the S&P 500, we're almost back up to the 6,624 at the moment. Not quite at all-time highs, but close. Interestingly, if you look in more detail, it's a few stocks driving it higher. A lot of stocks have gone nowhere in the last year or so. So it's not universally true, but the index is up. And if you look at things like the bond markets, well, they're a little bit more sanguine. Long-term bond yields are still somewhat higher than they were, although they've come back a little bit. But I do think these signals about risk premium in the US, the potential for long-term bond yields to be higher, suggests that the markets are not totally convinced. And in fact, you could argue that the stock markets and the bond markets are sort of pulling in slightly different directions at the moment. Long-term interest rates, of course, particularly long-term mortgages in the US, are actually linked to the bond yields. And it's interesting that home sales and the prices that people are achieving in the US are coming down at the moment, which is quite interesting. So I think we're in the middle of some more uncertainty.
Yeah, pretty crazy that we're on the precipice of World War Three and the VIX is only sitting around 20 and stock markets are sitting at record highs. Like it's almost like it's like society's attention span these days. It's within 24 hours, people have almost forgot what's going on or what they've read or what's happening.
Well, people will argue that the markets are looking ahead, but remember that the price earnings ratio on the S&P 500 is 22, which is massively high, right? And there are some stocks there with a PE of 30 to 40, which is remarkable. But there are many others that are actually hardly growing at all. And the fact is, the inflationary forces from the tariffs haven't yet worked through, but probably will work through later. And we'll talk about what the Fed said recently. So markets are massively over positive, overvalued. And it comes right back to what I said at the start. Why? Because of this massive pump that we've got through the continued issue of more debt, public debt and private debt, chasing more assets. So remember, folks, it's not really values going up, it's the value of your dollar going down.
Yes. Okay. So US dollar sitting around 98.
Yeah, so just talk about this. Of course, we were up at 110 back in February. It slid down, went a bit lower, up and down a little bit. But it is fascinating. Does Trump want a weaker dollar? That would potentially help some of his economics. But does it also mean that the end of the dollar as a sort of the global currency? Probably not in the short term. But it is interesting that we are seeing this somewhat weaker dollar at the moment. Again, it signals some uncertainty about people's levels of confidence in terms of what is going on there. And the story of bubbly markets. Well, look at the ASX 200. We are touching all-time highs again in Australia. Why? The economic momentum is slowing. Inflation is still lurking. We are expecting some interest rate cuts, of course. But I can't fully understand how we can see the ASX where it is, bearing in mind the issues in China. China growth is still slowing. We've got lots of issues with the tariffs and China and how that's going to play out. And China, of course, being Australia's big customers at work for exports. And then if you sort of take that further, if you look at the market in Australia, you've got the Commonwealth Bank up at 188, priced in multiples around the big techs in the US, way more priced than JP Morgan. I don't understand this, and yet it still goes higher. Now, people are speculating it's because maybe people are seeing it as a secure and safe investment, people coming from overseas. The greater proportion of people holding Commonwealth is now overseas than it was previously. But I can't make sense of this price. It is ridiculous.
Yeah, I agree. I mean, is it a symptom of, super and the ETFs and just the auto buying each month and everyone owns the Commonwealth and the big banks and it's madness. And I think at some stage more and more people are going to be selling out of their assets and choosing to probably go live out away from the cities. I think this is, the play for the next few years if things keep getting crazy. And so we're going to see more and more people selling their stocks and whatever for real things, land or food or whatever it is, if we keep going down this path. So that's where
Grow
I'm,
your
yeah.
grow your own vegetables is what I would say.
Yeah,
It's quite
exactly.
useful to be able to do that, right?
And that's where I wonder if there's going to be the liquidity for everyone to exit, or we're going to see these super funds bring in restrictions about, no, you're not allowed to sell your property ETF and your Commonwealth Bank shares or whatever.
Now, the most sneaky thing that I want to highlight before we go on is that there was the head of Amazon talking about AI and talking about the role of AI and how many jobs potentially could be skinned away over the next few years, right? And people are now starting to realize that white collar jobs are becoming perhaps dispensable. And my question is, well, how many people then are going to go out of work because they're going to be replaced by AI? And this could happen in the next 2, 3, 5 years. And if it does, it fundamentally changes the question of economics again. Are we going to have more and more people who aren't able to work, and what do they do, and how do they survive? And what does that mean in terms of a UBI, universal basic income, or some other strategy to keep people? And we're not having the conversations we should be having about this because we're too concerned about World War III and Iran and things. But these big mega trends, the AI mega trend in particular, is one I think we should be talking about much more.
Oh, I completely agree. Some of the new Google VO, it's now to the point where it's basically photo and video realistic. The AI, what it can produce just from voice
Mm.
command and from typing and whatever, and it's doubling at the rate every 3 months now. And so, people forget next year that's 16 times better, and 5 years out that's what hundreds of thousands of times better. So, what does that mean? Having something that's already smarter than a human for typing and research, already photorealistic. I don't think we can even comprehend what that means 5 years out from now in terms of how, like you said, like the average human, like what are they meant to do for work as it replaces all the white collar jobs, and the robots and the robotics replace all the, manufacturing and blue collar jobs.
Yeah, and it's interesting that NVIDIA announced a Foxconn initiative in the US where they're going to use humanoid robots in their server construction business. So, not having humans doing it, but having robots doing it. So, and it's already happening in China as well. So, I mean, we are at this sort of precipice of a whole new world. And I don't think we're giving airplay enough to some of the consequences of it. And some of the decisions that are being taken by those big tech titans aren't necessarily in the interests of ordinary people, in my view.
No, absolutely, just all about profit. But okay, so Bitcoin's held up pretty well, Martin.
Yeah, I thought you'd be amused by Peter Schiff's take on it, right? So he's saying, hey, remember, it's 15% below its November 21 peak relative to gold. I mean, it is fascinating how you can spin this. But look, the fact is that Bitcoin's around 105. That we still see significant interest in Bitcoin. The ETF inflows were quite strong again, and more and more people are questioning whether the traditional monetary system is fit for purpose. Well, probably not, and therefore are looking for alternatives. And Bitcoin is just sitting there.
I've been amused by Peter Schiff's take since 2013, Martin, and I'll continue to be so. So, yeah. Okay. Next
Yeah,
up,
exactly.
so economic
Yeah.
monetary policy projections.
So this was the Fed dot plots, all right? And I just wanted to highlight a couple of things here. So the Fed came out and said, huge uncertainty. We don't know how the trade thing's going to play out. We certainly can't cut rates at the moment. We might later. They actually, though, increased their estimates of future unemployment. They've assumed that there will be some rate cuts, but there's a massive spread as you go out in the longer run, particularly. But the rate cuts are going to probably come slower. And they're also forecasting significantly slower growth, economic growth in the US than expected. Now, if you put those things together, we're talking stagflation, right? Stagflation is when you get this horrible situation where prices are higher, growth is lower, but because prices are higher, they can't cut rates to try and stimulate growth, which means you get this sort of grind where the economy goes slower and slower, and more people get basically caught in the crossfire here. Now, stagflation wasn't mentioned once in the press conference, nor indeed in the notes from the meeting, but stagflation is now the thing to watch for, because unfortunately, I think the signs are there. The signs are also here in Australia too, and in fact in many other places in Europe as well, potentially. So we see this economic slowdown. Governments are desperate to try and find forces to increase growth, but it's more and more difficult.
Yeah. Okay, so you want to talk about Orcus and how much money we're wasting on these submarines, which we're
Three,
probably never going to get.
Yeah, 380 billion. Yeah, we already handed money across for something which may not happen. It's interesting. The US is now doing a review of Orcus. Of course, Australia says, "Well, we want to do it. We need to do it." The UK did a quick review and sort of said, "Well, we're battling on." But I'm just worried about how much money we're throwing across for. We don't get anything for promised, right? We might get something, we might not. When we get it, long time in the future. But I want to make the point. The submarine story was 20, 30 years ago, right? Defense posturing and the technology has moved on. Look at what's happening in Ukraine and Russia with the drones and, small, nimble things. I just think we're barking up the wrong tree here. And this massive amount of money that the Australian government is committing could be so much better spent and could actually deal with a whole bunch of other issues and probably have a different defense strategy and something a bit more certain. But we'll see. Maybe the US will solve the problem for us.
Yeah, I think it's just more insanity. I honestly think that they're trying to deliberately bankrupt the Australian government as fast as possible because we have had some surpluses and benefited from the commodities boom. And so now you're looking like things like NDIS and how many people work for the government, how many people are disabled, these $100 billion deals that we're not going to get anything. And it's like you said, how can we bankrupt the country the fastest way? They're just trying to do all these things that make no sense.
Yeah, absolutely. And talking about no sense, I did a little experiment. I actually asked AI about housing affordability. I made a show about it. And in fact, the AI said, the real problem is migration. The real problem is that we've got too much credit available. The real problem is that we haven't got supply sorted out. So the AI can call out what is needed to be done to solve the housing issue. But unfortunately, the government is only solving a very small part of it. And you may have seen they celebrated the delivery of 17 social and affordable houses over 3 years, but 17 out of the 50,000. I mean, they're just so far away from where they need to be. And yet, the leaders are ducking so many of the critical issues: credit control and supply, the issue of migration and demand for property, and all of those things. So to my mind, it's a shocking story of neglect from, the party that's in power. It doesn't matter whether it's the other side because they both are thinking the same. They're missing the big picture.
Yeah, absolutely. But Martin, when we're paying our politicians so much money of our taxpayer dollars to do the opposite of what needs to be done, like you really have to start asking questions about this agenda. Like you said, like how can AI tell you what's problem? Plenty of average people know what's wrong, and yet these politicians who we're paying don't represent the views of the people. It's just insanity.
Yeah, and you might have seen that there was some coverage of just how much Rudd in New York is getting paid for being the guy over there. Massive amounts of money. So the people in the system, the politicians, are just happy all the way because they're getting huge pay rises and a huge amount of superannuation. But ordinary people absolutely crushed. And the fact is, we do not have a strategy that's working. And this next little piece from Samuel was really interesting. It's all about supply argument for solving the housing crisis is remarkably similar to the just one more lane, bro argument for solving road traffic. Absolutely right. You cannot solve it by just building a bit more. And by the way, we can't build more because we can't get the construction people, and it costs too much. We have to deal with this structurally and systemically. And unfortunately, no, that's not what's happening at the moment. What we're talking now, of course, is interest rates potentially coming down. And if you look at the next chart, yay, whoopee, auction clearance rates are now high, So we've got all the spruikers saying property market is bubbling on again. Everyone should buy now. And unfortunately, more of the spin is being spruiked left, right, and centre. But just over the water in Kiwi land, watch this. I made a show. Kiwis get more good news on housing affordability. Housing affordability means it's cheaper. In New Zealand, prices are falling. And in fact, on the next slide, you can see they're more than 16% down from their peak. And interestingly, they turned back migration. They tightened up some of the lending criteria. And to my mind, there's an object lesson over the water in New Zealand as to what to do to actually begin to bring housing back to more affordable. In Australia, housing affordability is continuing to deteriorate.
Yeah, crazy. Let's hope that we do follow New Zealand in that regard.
And then just quickly, a couple of little headlines here, because I was just amazed. They're talking here. Hey, there are spots in Western Sydney where property is speeding. 39 days in Campbelltown, 42 days in Mount Druitt. The spruiking is incredible. Sought after. Well, the reason they were sought after is because their prices were somewhat lower, but people are piling in and paying way more than they should. And on the next one, they also say, and of course, you can buy apartments because apartment living is so much cheaper than it is to buy houses. But of course, they don't mention the strata fees, which are going up dramatically, and the defects in many apartment construction projects currently, which means that ahead people are going to be spending a lot more. The spin is everywhere. And again, I say to people, when you're thinking about property decisions, don't get caught up in the media spin. There are reasons why they keep spinning this stuff.
Absolutely. There's always an agenda. So what are some of these solutions, Martin? Should we fill all the hotels and Airbnbs that are empty with
Yeah. So this article was horrendous, right? So they were talking about the alarming rise in the number of homeless And homelessness is a big thing. And whether you've got a tent or whether you're living on a couch somewhere, the number of people without somewhere to live is massively high. So what they're talking about, well, they're talking about majorly perhaps converting some of the CBD office buildings that aren't used anymore into somewhere to live. Well, maybe. Or, of course, they're also talking on the next one, high density and controversy suburbs with 18-story blocks like in Canterbury and Bankstown and Punchbowl, places like that, Wiley Park. These are nutty solutions to the wrong problem. And I come back to my point about you cannot solve this with just building more stuff higher and building it cheaper. But actually, you can't build it cheaper, because if you build it higher, you have to spend more money building it. So the cost of construction rise. Trouble is that the costs are then borne by those people who buy into them because they've got defects on day one. The later down, that means that effectively you have to pay higher strata fees. So the costs of buying into the apartment sector are much higher than people think.
Yeah, and I mean, we've absolutely noticed that increase in homelessness everywhere. Everywhere you go and travel these days, and nobody wants to see it, but it's a symptom of this two-tier society and gutting of the middle class. But we haven't really seen it in Australia, but I think we're going to see this in Melbourne in the next 18 months with some of that civil unrest that we've seen across Europe and American cities, where people go, once you hit that financial pain point where you're desperate, you're going to break in and sleep in empty hotels or Airbnbs or buildings, like you said, and do whatever you need shelter. And these rich guys that own all these buildings are getting in for a rude shock when they can't get control of them back, and that, just like we've seen in other places around the world. And I think that's coming to Australia.
Well, I've always had the view that housing ultimately is a human right. It's not something just for the rich and famous. And we've got to swing the conversation around, because if we start from the assumption that everybody should have somewhere to live, it's a basic human right, along with access to food and medical support, that changes the dynamics of society, and it changes where you make your investments. But at the moment, we don't have that. We have effectively the wealth stoking mechanisms for some, but so many more falling off the back of the lorry. And politicians seem quite happy to play that game, and I'm disgusted by it.
Yes, I completely agree. Okay, so Labor flags wider tax makeover.
Surprise, surprise. Before the election, no, that was fine. No, we don't, nothing to see here. But suddenly, oh, hang on, we got a big problem with negative tax take. We can't put taxes up anymore, or we have to try and find other ways. So they're talking about a tax makeover. They're talking about, on the next one, productivity. We've got to try and improve productivity. And it's interesting that they've got to think about things beyond rate cutting. Right, that's very significant. How do you do that, and how do you create a more sustainable and inclusive society? That's a really good question, but I'm not sure that that's what they're going to actually come through. But then Chalmers says, no, we're going to cut red tape, right? And this is, I think, a really interesting article. Regulators overseeing everything from banking sector to consumer law are actually things that are blocking the growth that we need. What? Hang on a moment. Some of that regulation was put in place by governments trying to protect people and to make sure that. So we've lost the plot here. So we're talking about let's cut the red tape. Oh no, maybe what we should do is to on the next slide keep the GST in play. Maybe the Productivity Commissioner Danielle Wood said maybe we should reform the GST. In other words, charge people more for spending stuff. Or what about widening capital gains? Capital gains tax a target, and think about that. Or what about, and this was the one that really shook me a little bit, the Spectator says, and the Treasurer looks to the guest list for the productivity roundtable to be held in August. It's clear the family home is on the hit list. Instead of owning your home, you'll pay land tax, effective rent, to the government forever. And that's the point, that at the end of the day, the government is looking for any means at all of getting more money through their coffers. By the way, they're not actually putting the tax burden on corporates that they should, because corporates, of course, can strike back. So it's poor old small businesses and individuals that are being forced to pay through the nose again and again and again, and they want to do more of it. I find this ridiculous, and yet, guess what? That's what the agenda is.
Yeah, particularly once you understand the workings of the financial system, that governments actually don't need to collect tax. They can pay money if they really wanted to. As you said, collect more off the corporates where they've given foreign ownership to all our resources. Like I said, the system is now clearly an agenda to enslave Aussies and put them into debt and decrease our living standard. It's just mad to watch this unfold in slow motion.
And the last slide for this week, I just wanted to show you this bit of research from the Association of Superannuation Funds. Now, I know they've got an agenda, but I thought it was quite interesting. They calculated that a homeowner couple retiring today would need an annual income of $73,875 a year for a comfortable retirement. Singles a bit lower. And they would need about $690,000 in combined savings for retirement to fund that. Now, we've just spoken about the pressures on households, the inability of households to find somewhere to live, the fact that with cost of livings continue to rise. And my question is, how on earth are we going to actually find a journey for people to be able to have that sort of amount sitting available, ready for them to use for their old age? Or are we effectively just going to say, we can't do that? And remember that some of the allowances and government support for people in work today are in the 20,000 range, not the 70,000 range. So we have a massive structural issue here, which again, I don't think people understand. Most people won't have enough for a comfortable retirement. But these numbers, if they're anything like real, just shows how big the problem is.
Just like that number that went around on Twitter, half of Aussies has less than $1,000 in savings these days. Like, we are just so reliant on this system and already on the government. And let's hope we can both keep waking people up, Martin, before it's too late.
Well, that's what you and I are trying to do. We're trying to raise some questions and highlight some of the issues and have a different. There is a strategy. There are strategies that can be executed to change the trajectory, but it's not just more of the same old, same old.
Absolutely. We should do a whole show dedicated to solutions one time, what you and I would do if we were in charge to turn this around. So hope you guys enjoyed that one. As always, smash that like button, share these videos around. All the links to follow Martin's work and my work will be down below. And we'll chat again next month. Martin, cheers.
Cheers. Bye-bye.